Welcome to the High Signal podcast. My name's Sean. I'll be your host today with my co-host Ian. And today we have a very special guest, Parker White from DeFi Development Group will be joining us to answer some questions and talk about Solana's, DATs, and all of that good stuff. Welcome, Parker.
Thanks, guys.
Cool. Well, it hasn't been too volatile of a week for markets, maybe a little dip yesterday. But I thought, we'll just have time for a few questions. I'm really personally quite interested in DATs. And as like more of an ETH guy myself, I haven't been too exposed to the Solana space. So it's really good to have someone from that neck of the woods come around and can teach us a thing or two. So thanks for coming on, Parker.
Sure. Thanks for having me.
Cool. Well, just to get straight into it, would really like to hear, what happened in a previous life. So how did you get into crypto? What were you doing before? I believe you're in the traditional space. So how did you find your way into digital assets and all of this stuff?
Yeah, so I started my career in finance, TradFi, boring finance, boring fi. Maybe we should make that a thing, boring fi. But on the buy side, so managing money as an investment advisor for mostly institutions. So did a lot of bond trading and portfolio management stuff, equity research. It was a smaller shop, so kind of did a bunch of different things. Got my CFA during that time. Um, and then it was in 2017 that, actually early 2017, that I first heard actually about Ethereum. And this guy was telling me about this like global app store thing. And I was like, okay, I didn't fully get it. And then later in 2017, I of course got into ICOs like everyone did, right? And so started reading white papers, like, oh, I'll try to find the next ICO. But so then I kind of really got into crypto, and in 2018 started a little algorithmic trading shop with some buddies on the side. And so, I was in TradFi doing all of the finance stuff, but I'm self-taught engineer. And so, enjoyed programming on the nights and weekends and, building these algorithms. And so then throughout 2018, we worked on this project, but at the end of 2018, the bottom really fell out, as we all know. And so the guys I was working with, they're like, they went back to whatever they were doing. And I was very interested in digging deeper. And so I joined Kraken then in 2018 and really began to dive like headlong deeply down the rabbit hole. And so that's when I really discovered Bitcoin and what Bitcoin was all about. Hard money and non-sovereign money, and replacing, basically returning to the gold standard, returning to a fixed supply type money, but obviously upgrading from physical to digital. And so most of 2018 was about, most of 2019 was about learning about Bitcoin, like really the fundamentals, what the cypherpunk movement was about, all of that. And then kind of got into DeFi, DeFi summer. I was, very early trading on Compound and Aave and at Kraken. So like I was able to just reach out to a lot of these guys and be like, hey, I'm at Kraken. I remember talking to Hayden over at Uniswap, but it was just him and his assistant. And so it was like in the early days of DeFi, like, oh, this is so cool. Like you can just trade and like you can just do stuff. You just build stuff, And so I think it was in kind of late 2021, I got introduced to Solana and started, playing around with the copycat metas basically. So, there were the dexes and there were the lending platforms as well. And so kind of, I would have called myself back then more of a Bitcoiner, but also playing around in DeFi land with all these different protocols and watching the kind of Cambrian explosion of the, I guess, layering and the interoperability. Like, hey, you can do the DEX and then you can have the lending platform and then you can do like interest rate stripping with Pendle. I know that came a little later, but like how these things all get built on top of each other. I guess composability is the word there. And so I was at Kraken for 6.5 years, just doing standard, mostly engineering stuff. Did some AI work there, built up an AI team, but still like on the side was very much focused on DeFi and had a blast, being involved on a personal basis. And then, saw what MicroStrategy had done. Then, of course, the Trump administration came in and really kind of ended choke point 2.0 and like basically all out assault on crypto. And so me and the former chief strategy officer at Kraken decided to, give this like DAT thing a go. We saw what MicroStrategy had done. No one was building one on Solana or ETH at the time. We're like, hey, let's do one on Solana. And I'd been running some Solana validators for about a year. And so it's kind of a natural fit to do this Solana one. And we launched the DAT. And in 7 weeks, the stock was up 9,600%.
Jesus.
So I think today we're still the number one performing stock on the NASDAQ and the NYSE this year, even despite, the pullback. And I believe still we have outperformed MicroStrategy since they started. So we've done in 6 months what they did in, 5 years. So kind of a wild ride, maybe a little bit lucky, probably a lot lucky, but it's been a blast. Basically, being a public company, being regulated, but operating on chain, and we'll get into that later, but like doing all the full on degen stuff on chain as a public company is pretty cool.
Just going back to, you mentioned kind of sovereignty and that whole philosophical angle of Bitcoin and the independence of that and the kind of fighting against the man, taking the power back. How did you marry that with kind of joining Kraken, right? Because if it's anything like my own education, and don't get me wrong, I would have taken the job at Kraken for sure. I'm just wondering, like, when you kind of got the sex versus the sovereignty clash going on in your head, how did that kind of build over time and take shape for you philosophically?
Yeah, at first it was like, hey, just get into crypto. And so I, took the job at Kraken. But the Kraken ethos is very, Jesse Powell, it's very crypto aligned. And so, Kraken's mission is really to build this bridge. And especially at the time, there weren't nearly as many on-ramps. And so if you wanted to buy crypto, you wanted to get in, it was like, you buy on Kraken, you buy on Coinbase. I mean, if you're a US person, there weren't that many platforms to use. And so it was kind of this like, hey, if you want to build a bridge that's not going to get shut down, it's not going to get, debanked. And we almost were, right, during choke point 2.0, but we kept our bank accounts. You really had to play by the rules. You had to do the KYC, you had to do all that stuff. But that has served as a stepping stone or a platform for so many folks to get in to the space and get their wealth and money into DeFi and off the KYC platforms. And so, it's a bit of a necessary evil, and it kind of serves its purpose, basically.
Interesting.
I'd like to like you mentioned, and like that's an absolutely crazy stat that you guys have been the like highest performing stock on the NASDAQ and the NYSE over the last year. Is that because of the DAT mechanics, and maybe just taking a step back, like maybe for a lot of people in the audience, the concept of a DAT seems, quite mysterious, or, is this black box of, I think Matt Levine has this way of characterizing it as, you have a box of money and it's worth, it's got $1 in it, but somehow you can sell it for $2. Like maybe you could take us through sort of like how you understand the mechanics of a DAT operating, and, there's this concept of mNAV and convertibles. Like how do you tell, I don't know, how would I tell my mom, say, like how a DAT works? Because I tried and it's very difficult.
Yeah. Well, I'm still learning and trying to figure out what lands best. But ultimately, a DAT is a vehicle, an accumulation vehicle. So the whole purpose of a DAT is to grow assets per share. So BTC per share, ETH per share, SOL per share. And then there's a lot of tools at your disposal to do that. So you can do the convertible bonds, the preferred shares, you can run the ATM. In our case, you can run a validator, you can stake, you can do stuff on chain to increase yield. But all these things point back to SOL per share growth. And as an investor, an individual investor, there's a lot of options that you have available to you. You could just go buy some SOL, stake on Coinbase, fine. It's going to grow at a couple % a year after fees, maybe after your taxes. Great. You could buy an ETF. There's going to be some fees there. There's also going to be some staking yield, but they can't stake everything. They have to maintain some liquidity, whatever. But then you can basically go into a DAT, an operating company that is using a much larger tool set, much larger toolbox to grow that Solana per share. So the MicroStrategy model is a little more simple. There's fewer things you can do with Bitcoin. So Bitcoin, the asset, just sits there. And so all the activity is on the capital markets side, right? The converts, the preferreds, the ATM. And you can kind of do these things, actively manage it to grow Bitcoin per share. So fine. So we can take that playbook. We can do the same things there. We've done a convert. We've filed an S1 for a preferred. We've run the ATM. We've done all these things. But then because Solana is a productive asset, we also have this like other side of the equation that's pretty unique, where we can run our own validators in-house, get third-party delegation to that, which helps us grow our SOL pot. We stake to our own validator. Then we have our LST. We use that on chain to run stake looping strategies and other things. And so all of that boils down to multiple angles to grow our SOL per share, both with capital markets and then just organically. So ultimately, if you think about our business as a business designed around SOL per share growth or asset per share growth, it actually kind of looks like any other business in a sense, right? So if you are buying shares in, say, NVIDIA, right, and they don't pay out dividends, they're just reinvesting everything. Actually, I think NVIDIA does pay out dividends. But let's take a hyper growth stock that doesn't pay out a dividend. And they are not paying out any dividends. So what you're buying is a growing asset base. You as a shareholder are saying, hey, they're going to be able to grow their asset base. They have their management team. They're going to do all these things to grow their asset base over time. Their asset base just happens to be cash and then IP and some servers and some different things. And they're just trying to grow that. Our asset base just happens to be Solana instead, but otherwise we're trying to grow that. And so going on, this is kind of a long-winded way of saying that our business and DAT's built on a productive asset like Solana, they kind of look a lot like a technology company that are growing their asset base, and they just do it a little differently. And maybe, unfortunately, have been kind of given this DAT label, like, oh, they just have assets and they just kind of hold it there. But actually, no, you're like using the assets to grow the asset base. So I'll stop there.
No, makes good sense. And those are the mechanics. And if more on the kind of narrative side, you mentioned that there was a existing relationship with the chief exec or kind of your co-founder. Just talk to us a little bit more about kind of how it felt, the idea coming around, and then the vision and where you're going with it.
Yeah, so in the early days, it was the MicroStrategy approach. Hey, look, they've done this, and so it's the ATM, it's the converts. I don't think they'd done any preferreds, or maybe like one preferred at that point. But then we also obviously saw that, hey, you've got this productive asset, you've got Solana, you can, run validators. And so there was I think we had about a 2-page strategy doc, some loose ideas, some of which we've kind of fleshed out more, some kind of fell by the wayside. But in many ways, this was kind of it was a new thing, right? I mean, Yes, MicroStrategy kind of sort of paved the way in some regards, so we had something to go off of, but a lot of the things that we've been doing are new. And we've been kind of like the first in a lot of different things. So the first to tokenize our equity, the first to launch an LST, the first DAT ever to do a warrant dividend, which we just wrapped up. So we've been just trying a lot of new things to add more things to the toolbox to grow SOL per share. So, we pull out a hammer and we're like, is this useful? We try it. Hey, that's pretty useful. Dump that in the toolbox. And so that's kind of been, it's been a process of rapid iteration, trying to go as fast as possible, fail really quickly, and then find the things that work and then do those over and over and over again. And just by, that pure speed, amassing a bit of a tool chest to grow Solana per share that is, we think larger than most other DATs out there. And so I think it's just this rapid iteration pace that we've been focused on.
If someone forces you on the whose idea was it, do you choose not to answer that question, or is there or was it like, I don't know, he said it, I said it?
It was my idea, but ideas are whatever. And this was an idea. And honestly, working with Joseph, he saw the idea and he was like, "This is the big thing. Let's go." And so it wouldn't have come about if he hadn't validated it, because ideas are worth basically nothing.
I like it.
Could you take us through? Oh, sorry.
Go ahead, mate. Go ahead.
Could you take us through some more about, like, you mentioned, I think, three things, right? The tokenized DFDV stock. You guys have an LST as well, and then some warrants, right? Like, I'd love to hear some more about that, because I'm guessing you guys are just sort of, as you said, picking up a hammer, seeing if it works. Some more of the mechanics and reasoning behind a lot of those things, I think I'd love to hear a lot more about.
Sure. So ultimately, we see our mission as a bridge. And if you look at our logo, you can kind of see it looks like a bridge. And so the real genesis idea was, we can serve, coming from Kraken, which serves as a bridge in some ways, we can serve as a bridge in a different way. And so the way we think about it is bringing TradFi capital into DeFi, and then DeFi returns into TradFi. So providing this bridge for capital and returns. And ultimately, our hope is that people aren't over here talking about DeFi and TradFi, but they're just talking about finance. And that's because the two have come together, and there aren't really these two worlds. They're, married. And so what we've seen is a real lack of that crossover, right? Where you've got your crypto funds, your crypto hedge funds, and they raise capital primarily from OG crypto people, and maybe they do some venture stuff and they get allocation from like fund to funds or whatever, but it's mostly like crypto money over here. And then on the TradFi side, it's like, maybe there's some like crypto ETFs, Bitcoin ETFs, whatever, but by and large, they only stay with companies and maybe they buy some Coinbase, but there's like not nearly enough crossover. And so we wanted to serve as kind of that bridge. And candidly, MicroStrategy in one way is serving as a bridge, but in a lot of other ways, they're not. I mean, they're not doing anything with the Bitcoin, right? They could be doing a lot of things with it. They're not just sitting there, which is fine. But we wanted to really serve as that bridge. And so the general idea is raise capital in TradFi and then put it to work in DeFi to generate returns that TradFi will want more of. And so they'll jam more capital in here. And so if we can port over, let's call it 50, 100, multi-hundred billions of dollars worth of liquidity into DeFi across the board, make those markets more liquid, more efficient, more attractive for more builders to come in, we think that'll really help spur on innovation and continue to grow the space such that, you have market leading, liquidity leading, all these things, products on DeFi that attract more and more capital and just get that flywheel going faster and faster.
No, that makes sense. I guess one question that I have is, like, maybe this is a great problem to have, when you guys have like such an inflow of capital, this sort of becomes this point where it becomes hard to actually scale that yield, right? Like, if you guys are earning like 5-10% now on, I think you guys have 400 million, when you scale that to like 40 billion, then that becomes considerably more difficult. Like, I think the example that comes to mind is like with ETH staking. God, like I long for these days again. Like, ETH staking originally was like 16% annualized, way back in 2021, I think, was when the whole grayscale thing was going on. Now you're lucky to get 3%. So I guess that's maybe one thing, but maybe it's a problem for another day that you guys have to worry about.
Yeah, I mean, look, the point when rates in DeFi, generally speaking, match those in TradFi, that's kind of the point that we've won. Like, it's become like, hey, job done, and we'll have new problems to solve at that point. We'll be a multi-$100 billion company or larger, and I don't know, great success. Like, I'm very excited about that day because it means there's no more gap, there's no more need to bridge, because there's not like a bridge across the river. It's just like, the whole river's open.
I think the way I think about that is if we mainly a lot of the kind of savings we have in terms of the rates matching. I think the reason the rate can be higher is that we're removing a lot of friction and middlemen in a lot of these financial processes. I'm here on holiday with my family in Dubai at the moment, and yesterday we finished shopping at the mall, and there are like 5 different floors and 5 different entrances, and depending on which one you go to, there's a broker for the cab, and the broker is kind of bartering with you on the price for the taxi that then pulls up. And it was really making, I mean, I think too much about crypto and DeFi, but it was really making me think, to your point, like if the real rate's 7%, but there are 2 middlemen in between, you end up getting 3.5, whatever it might be. So for me, it's sometimes the technology just connecting the endpoints, and therefore from like a are we there yet perspective, there has to be this massive transition from the middlemen taking jobs in crypto. Because if they don't do that, then the problem we're trying to solve at the end is, what do we do with all these people who are employed in these kind of brokerage and intermediary businesses?
Yeah, and the way, as liquidity flows into DeFi, more and more problems become solvable. And the TAM becomes large enough that it attracts more and more developers. So today it's like, well, you don't really have options trading on chain for the most part, because there's not enough liquidity sloshing around for it to make sense for a team to build that out, because there's like a bajillion, on a single asset, there might be like 10 tenors and 50 contracts per tenor. So you have like 500 things on one asset. But as liquidity comes in, that becomes much more attractive to build. And there's becomes all sorts of other second and third order things that you can build. And so I think liquidity creates more activity, more development, and ultimately begets more liquidity. And that just sucks builders, developers, entrepreneurs into the space, which is a pretty powerful thing about liquidity.
Yeah, I would just say, like, I really echo your point, Parker, of just like how I think there is a liquidity problem still in crypto, right? And I think we all long for that day when you have that convergence with what TradFi has. Like, I think options markets are the perfect sort of canary in terms of like how liquid is an actual market right now. And, it has been hard, like sort of trying to build up an options market because, frankly, as you said, you have 10 tenors, you have 50 strikes a tenor, you have calls and puts. Like, making markets on that is just absolutely terrible. It's hard. And, whereas for perps, it's quite literally 2 orders of magnitude easier. I think that really, as the space develops, we'll just see more liquidity flow in. And like when you do have those rates converge, like that is a really good sign of like how liquid and how deep the system has developed so far. So yeah, I agree with that quite a lot.
Absolutely.
Just moving back to the DAT piece again, one of the things I want to achieve with your help, Parker, is like every angle of this being understood by our audience. And one of the ones I'm curious about is when you're looking for, and I don't, correct me if this is the wrong term, but like a legal vehicle, like an entity that you can some kind of like reverse into, or you can merge with, or you can acquire. How important, if at all, is what the entity is doing right now? Whether does it need certain kind of licenses and things, or maybe a way to be specific about you guys would be how much of the commercial real estate and AI business remains, and how much of it is now, exactly what you guys are focusing on.
Sure. So technically speaking, any business can do what we're doing. So the real estate business still there. It's actually growing. It's doing better than it was. I don't know, maybe there's a little like ancillary publicity or something that we're helping to drive towards it. But ultimately, what we're really just doing, I mean, yes, we're running a validator. So like set that aside. We're just managing their treasury. And we've just raised a bunch of money for their treasury, and we're just managing it. And so big companies, they have treasurers, treasury departments, and they invest in, treasury bonds and money markets and these different things, and they manage FX exposure, whatever. We're just a fancy treasury department doing stuff on chain. And then, yes, we have the validator business, so we do actually have this operating piece attached to it. But the real estate piece is continuing to do its thing. We didn't fire anybody there. They're still growing. Blake Janover, the old CEO and chairman, he is now our chief commercial officer, and he's continuing to run that business. So really any company can do this. You need the crypto expertise. So if you're a founder, maybe more of an owner, CEO, founder, whatever, of a different type of company, you could maybe bring some crypto people on to help run your business, or at least run the treasury portion. But if you're a team and you're kind of looking for one of these vehicles, really what you want to do is you want to find a good partner. You want to find somebody who believes in what you're trying to do. They're not just in it to like get a quick buck. And then also you want to find a clean vehicle, right? You want to find one that doesn't have a bunch of lawsuits outstanding or a bunch of debt or like other kind of hair on it, so to speak. And from there, just go about building business.
I love the idea of like someone coming in to view the business. So like, I'm picturing like a building, right? And then there's this door with treasury department. And you open the door and you guys are sat there like on beanbags with MacBooks.
That's right.
It's the future.
I'm curious to hear, like, so you guys basically have come into an already existing company, this commercial real estate business, and you guys are sort of like an in-house hedge fund, treasury management sort of division, right? I was wondering if you could take us through, like, sort of how do you bootstrap sort of getting all of this SOL? Like, do they have a bunch of money already, or do you raise it via convertibles, and sort of how does that work?
Sure. So all the cash that we've deployed has all been raised. The cash they had in the business, we carved it out and left it with the real estate group so they could continue to operate. And they had a little bit of burn, so they needed some cash to cover their burn. But we raised money from some crypto funds to start. So our first round was led by Pantera with Arrington and Kraken and some others. And then we did a second round. And then we did a convertible bond, and then we did another big round that included some hedge fund names like a Citadel and some others that you know well. And then we've been, of course, just selling shares into the market as well with our ATM. So there's lots of ways to raise capital and lots of flavors of return. So some people want to buy equity, some people want to buy convertible debt, some people want to buy preferred stock, and so they get different kind of risk reward exposure profiles to basically Solana in this package. And different investors want different things. Some want income, some want, debt, senior in the cap stack, some want just volatile equity, some just trade the options because, they like the high level of volatility. So providing these different kind of products or ways to access Solana essentially is how we've raised capital.
No, interesting. And I think I read, the Cantor report on you guys. And so you had a 2030 convertible earlier this year. I think you guys raised 40 million from that. And that was so like, take us through sort of how that works. So like with regards to convertibles, I think some people listening might not be too familiar with that. Like if I'm one of these investors, I'm guessing I give you some cash and like in return, what do I receive?
Yeah. So a convertible bond, so there's two pieces to it. There's a bond, a fixed income piece. So I'm going to loan you money, and then you're going to pay me an interest rate, every 6 months or every quarter. And then at the maturity, say in 5 years, you're going to give me the money back. Great. So that's a bond, regular bond, happens all the time. With the convertible bond, you layer on this piece where it allows you to convert the bond into equity. Now, why might you do this? And convertible bonds are mostly found with smaller cap companies. This is because smaller cap companies have a lot of risk involved with them, higher chance of bankruptcy. Very few of smaller companies have credit ratings. Even MicroStrategy, like they just now got a credit rating. And so when a debt investor is going to make this fixed income investment that's going to have a higher degree of risk, they want the ability to participate in the upside. So in addition to the bond, you're going to have this conversion feature, which says, hey, for every $1,000 worth of bond, worth of paper, that can convert into X number of shares at Y price. So in our case, it was I actually don't know the exact share number, but each $1,000 converted to shares at $9.74. So you just take 1,000, divide it by 974, and that would be the number of shares. So investors can come to us and say, hey, I don't want the bond anymore. I don't want interest payments. I don't want you to pay me back. I just want shares. Cool. We send them shares and then delete the bond. And now they have shares and they can go do what they want. So why would they want shares? Well, if the strike price is, let's say, $9.74, and let's say our stock is trading at $30 or $20 or whatever it is, then you might want shares, and then you could turn around and sell those into the market and realize this built-in profit. And so as a investor, a convertible bond investor, you can participate in that potential upside with a company, but you have some downside protection. So if the company doesn't go up and the stock doesn't go up and it's not doing so well, then at the end, you're going to be able to get your money back, and you'll get some interest along the way.
Makes good sense. What about index choice, Parker? How important is it? You guys went for the Nasdaq and I think also the Frankfurt Stock Exchange. What was the reasoning behind the two different choices, and how important is index choice for listing?
Yeah, so most of these companies, most of these DATs have been done on the Nasdaq. There's a lot of companies on the Nasdaq. They've got pretty good support for small cap companies, so it was kind of a logical choice. In terms of the Frankfurt listing, candidly, they just added us, so we found out about it after the fact, so it's great. But we didn't really candidly push for that one. And then in terms of being included in indices, absolutely, it's a big, important one. Saylor's been talking a lot about MicroStrategy trying to get into the S&P 500, us getting into small cap indices like the Russell 2000. This just brings so much passive buy pressure for the stock. And so this is a really important part of, what we're working towards.
How do the two things meet where, let's say you hit the Russell 2000 and then, suddenly you're on pension manager or investment manager's default funding setup, but they then look at the activities and say, oh, I'm not sure if we're allowed to do that. I'm not sure if does that happen? Like on criteria A, you should now be included in this massive new liquidity potential for flows, and then criteria B, let's look at specifically what this business is doing, whatever, defense and weapons or tobacco, and this one's doing crypto, and we take a judgment on that.
Yeah, so the passive managers that say just track the index, right? They just track the Russell 2000. They buy the stock. They got to track the index, and so whatever the index weight is, they're just going to buy the stock in that weight, and they don't take any judgment. Active managers would certainly take a look at the business and decide what they want to do. And I think crypto has become a lot more mainstream now. With U.S. Congress passing the Genius Act, and it is very legitimate. Trump has launched a meme coin, and different politicians are doing things directly in crypto. So I think, ruling crypto as this dirty thing alongside some of these other sin areas, I think that's probably a thing of the past. It might still happen in a few, corners of the market, but I think crypto is pretty mainstream and so pretty safe from some of those, type judgment type calls.
I hope so.
Speaking of speaking of regulation, I think earlier this year you guys applied for an S3 filing with the SEC. What happened with that, and where do you see that going forward?
Yeah, so that was that was pretty unfortunate. So it's a pretty technical regulatory thing, but essentially an S3 filer status allows companies to issue new securities pretty quickly without much review from the SEC. But it requires you to have your filings all up to date for the prior 12 months and everything to be kind of in good standing. So we, when we did the takeover, a couple days before, the company filed their 10K, their annual report. And there was a little section in there, a couple sentences. And instead of it being a couple sentences, it should have been 2 paragraphs. So a pretty minor thing, had nothing to do with the numbers. But the SEC was like, hey, look, you should have included, 2 paragraphs instead of a couple sentences. And so we had to update the 10K, and so then it's late at that point, and so then it's like, all right, you got to wait 12 months before you have this S3 status. It's not the end of the world. We have S1s. We can file those. We filed a bunch with the SEC. We've got 3 on the SEC's desk right now for different types of securities, and they review them and then maybe ask for some changes in the filing, have some comments, you respond to those, and then you get your securities approved. So it's pretty common for small cap companies especially, but even some larger cap companies sometimes have issues with their filings. And anytime you see a restatement of any kind, that automatically means your S3 eligibility is eliminated. So sometimes there's, very large companies that have this issue if they have to do a restatement.
Okay. And a topic close to our heart, but I'm interested in your world, DFDV options. How do they work, and what kind of appetite have you seen for kind of DAT related options?
Yeah, so because of the volatility, there's a lot of demand for options on DATs. Also because the options for, especially for Solana, which just got its first ETF, like this week, options have not been available. Traditional options have not been available. I mean, even, I guess you got some options on Deribit and OKX a little bit, but like liquidity is not nearly there, even relative to say what it is on our stock, our small stock. And so, the market maker infrastructure is pretty solid such that when the NASDAQ or the SIBO or the NYC lists options, the big market makers like immediately pick it up, immediately start quoting, and there's pretty deep liquidity there. And so we regularly see pretty significant trading volume on the options because of the volatility. So guys will own the stock, sell covered calls, generate a lot of income, buying puts, selling puts, all the things. And so being able to essentially plug Solana into that existing options infrastructure that, as soon as the NASDAQ listed, all the market makers jump in, was a pretty big opportunity for us and, for all the traders that are playing around.
Super cool.
How do you see, this is graphic I've got in front of me of like the number of DAT treasuries per asset class. And so for Bitcoin, there's at least 110, 120, something in that range. For ETH, it's maybe about, depending on how you count it, maybe like 10 of them. SOL, there's like a handful, maybe 3 or 4 or 5. And then, for all the other ones like Hype and Tau and BNB, there's 2 or 3. How do you see this readjusting as time goes on? Like, do you expect the number of Bitcoin DATs to consolidate, and maybe an optimal number would be something in like the 20s to 30s? How do you see that changing, and specifically for SOL?
Yeah, so I have an interesting take on this, although I don't know, maybe it's not that interesting because I think this is what Saylor would say. I'll kind of answer with a bit of a question. How many USD treasury companies are there out there?
Are those banks?
There's a lot of USD treasury companies, right? Every single company out there holds their treasury in USD. Yeah, banks maybe are like the closest, pure play treasury company, but NVIDIA holds, cash on their balance sheet. They're a USD treasury company, sort of, right? They have this other business tied to it, so it's not just holding this cash, but it's like this other business thing. But when you look at all the things that you can do with digital assets, I mean, even with Bitcoin, there's a bunch of things these guys could start to do. I think long term, every company is going to be a digital asset treasury company, a DAT of some kind, because holding money in this rapidly depreciating asset that is fiat currency just makes less and less sense. I mean, you're seeing it today with the price of gold rocketing, right? Countries are buying gold. Companies are starting to buy more gold. And so I think the number of DATs is actually going to massively expand, but we'll stop calling them DATs and they'll just be companies. And some companies hold cash and trucks on their balance sheet, and they do things with the cash and trucks to grow their balance sheet and pay dividends. And then other companies are going to hold Bitcoin or Solana or what have you, and they'll use that to do all sorts of things. We're trying to specialize in doing on-chain activities, but someone else could come in, MicroStrategy could come in and say, hey, you know what? We're actually going to do Bitcoin denominated loans. That's also a business that they could do. And maybe it looks a little bit like a bank, but like that's a business. Somebody else could take their Bitcoin and say, hey, actually, I'm just going to wrap it. I'm going to stick it on ETH and I'm going to do like some liquidity provision with that. And that'd be very different than doing off-chain loans. And so then they would have a different business model. And so I think you're actually going to see the number of DATs expand, but I think the word DAT is going to eventually fall by the wayside and it's just going to be companies.
One quick question on that as well, and is I think like the ratio of, I know maybe the term DAT is not kosher in this context then, but
No, it's great.
the amount of the dollar value of of Bitcoin held in ETFs is like nearly 200 billion right now. And the amount held in DATs, like primarily, let's say MSTR, is like roughly equivalent to that. It's like 190 billion. And when you look at ETH, it's similar. There's like 30 billion in ETFs and 30 billion, or maybe 20 billion, 20 and 20, I think, in ETFs there. For Solana, I think that discrepancy is much bigger. I think there's like 3 billion in Solana ETFs, but only like, I think 500, 600 million in DATs. Do you expect that ratio to fall in line to what you see for ETH and Bitcoin, or do you expect that ratio to be divergent for the future?
Yeah, I think your numbers are flipped there for SOL, where SOL DATs have a lot more assets than SOL ETFs.
Oh no, it is the other way around. Yep, sorry, my memory is. Yep.
I think that's largely a function of timing, right? So we were the first SOL DAT back in April. We had a 6-month head start on the ETFs. SOL DATs others have launched since then. I think it's reasonable in the short term to see that kind of converge. However, I do think longer term, SOL in particular, DATs have a stronger advantage over the ETFs relative to especially Bitcoin, but also Ethereum, and that's because of the yield differential. So the ability to generate additional yield above what the ETF generates kind of drives the relative demand for ETF versus DAT. So if you strip out the capital markets activity, if the ETF on a baseline can generate, let's say, 5% yield, and we've historically done 10% yield on our treasury, that's a pretty wide gap. If you look at it, say, on the ETH side, and maybe an ETH treasury company could do, say, 4%, and the ETF could do 2.5% or something. I'm just making up numbers. I have no idea what they are. Then it's like, well, it's only a 1.5% delta. Maybe there's like not as much value there. So I think the wider the delta is on an asset, the more demand there's going to be for the DAT. And to the extent that, a Bitcoin DAT or an ETH DAT can show like sustainable material yield improvement over the relevant ETF, then I think they capture demand from the ETF.
It's like when I think of my wider like bull case for the whole space, I suppose. One of the big things that we're seeing in terms of like the cross section of holders, let's use Bitcoin as the biggest asset, is that a lot of the kind of OG holders, more than ever this year, I think something like 40-50% of a certain age of coins have moved into institutional hands. And I remember, you referred back, if you go back to like whatever it was, 21, 22, there was this massive question of like, or not question, expectation. The institutions are going to come and buy our bags. We're these DeFi, degen guys, and one day the institutions are coming. And then it kind of got scary, right? Because they did. And then everyone suddenly, instead of cheering, everyone's like, oh, well, the institutions already bought the bag, so now what? Like who's the marginal buyer? And what you're talking about, I love the picture you're painting of like digital asset treasuries being treasuries. And if you suddenly start imagining that 10% of all companies, 5%, 1% of all companies manage all of their assets as digital assets, that answers that bigger bull case question, right? Because then it's kind of like so ubiquitous that we're all going to make it. That's like, so if I distill that down to like a two-parter for you, What's your bull case for Solana, and what's your bull case for DFDV within that?
Yeah. So our bull case for Solana is that SOL is going to 10,000 a coin. And basically that comes down to a slice of global value transfer. So payments and, all transactions, exchanges, fixed income activity, and then like a growing new forms of payments between, AI agents and robots and, like all these things that are continuing, all these new entities that are coming about all need to be able to pay each other.
Mm-hmm.
And so we believe long term, Solana can capture, I don't know, 7.5. The number we put out there is 7.5% of all global value transfer. So a respectable single digit number. And then if you throw about a 30x earnings multiple on that, which is pretty reasonable relative to what companies generate, and certainly well below the multiple that it's receiving today in the market, then you get to $10,000 a coin. So that's kind of the bull case for Solana in our view, and maybe that's like a medium bull case. And long term, it probably grows above 7.5%. And then for our business, the goal is to provide investors as much exposure as possible. So today, our SOL per share is about 0.06, 0.07, kind of right in that range. It's like 0.068 on a diluted basis. And so our goal is that by the time we get to, let's say, the 10,000 Solana number, our SOL per share, we've given a target by the end of 2028. The target is 1 SOL per share. So the goal is we can continue to grow that, compound that SOL while the price of SOL goes up. And so we kind of have this like leverage effect where you're getting more of an appreciating asset over time. And so we provide this kind of simple way for an investor to get long-term exposure to SOL. They don't have to worry about trying to trade it and manage it and worry about their income taxes every year. And if they have it on the right exchange or custodian or whatever, they can just buy the stock, maybe in their retirement account, and just like leave it alone and get exposure to the growth of Solana. That's ultimately our goal and mission.
No, very interesting. I've got a question from one of our listeners, Professor Mutonium. So I'll just read it out verbatim. But in the best case scenario for DeFi development and SOL appreciation over the next 5 years, if Parker was given free reign to develop whatever he wanted with a slice of the SOL, what would he be most excited to build?
You guys will probably appreciate this answer, but I really want to see options trading on chain in a very liquid manner. You're starting to see a little bit of it with prediction markets, which is like really exciting. I mean, I was just talking to someone today about the government shutdown and like what are the odds, because we were like debating this, the filing timeline for a filing thing, and I was like, well, what's Polymarket saying? What's Polymarket? And he was like, well, what does Kalshi say? But so we're starting to get a little bit of that, but like options on everything. So yes, options on all the assets, great. But then options on our tokenized stock. I mean, that would be fantastic, right? Where today the options markets, they close, and they're not open on the weekends. And we have a lot of people that trade our stock in Asia, particularly in Korea. Kind of sucks for them. I mean, they're not awake during like the primary market hours. So I guess they got to trade like really late at night or super early in the morning. Like, what if there was an options venue that was 24/7 that they could just trade on their, own time? So there's so many use cases for options and ways to innovate beyond what we currently have today. And I think perps are a perfect example of the innovation that's possible in crypto, where it's like, yeah, you have these like boring futures that you got to like roll every month because you want the front month contract, and it's like you have this slippage and it's really inefficient. And then Arthur Hayes and the BitMEX guys were like, oh well, let's just do perpetuals. And like perpetuals were a crypto specific innovation on an old model that made the old model far better. What can crypto do for options to make the old options model far better? We haven't really seen that yet, and I think that innovation has to happen on chain because it's had plenty of time to happen in CeFi and like it's not doing anything. It's like Deribit and OKX, and Deribit just sold to Coinbase. So like, I don't know, I guess they're giving up. The innovation is going to have to happen on chain. And so I'm super excited to see that happen and see the like ways that it improves over the old model.
Love that. And just also when you mentioned prediction markets, I don't know if you guys saw, but there was a really cool thing last night on the Coinbase earnings call. Just as it got to the end, one of Brian's team sent him a link of the words that there was running markets on that he may or may not say, and he just reads the whole list. He just takes that. He's like, oh, one more thing, divergence, profit, and just reads the list. And all these guys are like, yes. So every market on the prediction paid out.
Amazing. That's so cool. I love it.
We have so many community questions. Do you want to pick a couple? I mean, we're never going to get through them all, Sean, but what's your favorite?
You pick any. I'm spoiled for choice.
Okay. Let's go with this one. For traders who are used to trading options on sexes, what do you think the advantages are of moving to a DEX like Derive? If I generate large trading volume there, at the moment both institutions and retail users are quite sensitive to trading fees. This feels like more of a Derive question than a DFDV question, but feel free to throw in your take on that, and we can maybe build on it, Parker.
Sure. I think the real value is that right now anyone has access, especially on the maker side. And so, today in, say NASDAQ market maker land, it's very hard to become a market maker. And consequently, there's like 3 or 4 market makers that do basically all the making, which is kind of like sort of monopolistic. And, there was all the Robinhood stuff and payment for order flow. And it's like, what are these guys doing? But they like have this stranglehold on liquidity in the market. Some of that's because of their latency benefits. They do the co-location and stuff. And so bringing it on chain, it kind of evens the playing field, opens it up for everybody, and everybody has a chance to get started building a maker business if they want. And it's just a more even playing field from my view, but I'm not nearly the expert that you guys are. So I'd actually be interested in y'all's answer too.
Go ahead, Sean. How would you answer that?
Wait, can you repeat the question for me? I have the memory of a goldfish. Sure.
This is from our WeChat community, so it may be translated, but I'm trying to make it clear. I think Park did a great job. For traders who are used to trading options on sexes, what are the advantages of moving to a DEX like Derive if I generate large trading volumes there? At the moment, both institutions and retail users are very sensitive to trading fees.
I think... in particular for Derive, I think one of our biggest selling points is, we have this plethora of collateral. Like I think a number of our team have spent the last 24 to 36 months onboarding all of the top options market makers in the space. And I mean, to your point, Parker, like it's not as much of a, it's not as tight of a knit circle as like the traditional space, but also to your point earlier, because it's so difficult both technically and liquidity wise, it's very hard to be a market maker in the space, and also the space isn't as lucrative as market making perps, unfortunately. So we spent the last 36 months onboarding all of these market makers, and we have really good liquidity. I think unlike farming points on Hyperliquid or lighter, I think our advantage is that like we allow people to monetize assets that are not monetizable elsewhere. Like for instance, I think we were the 8th largest holder of Lombard's Bitcoin at some point, LBTC. So if you looked at the I think it was on Arkham, you saw the top holders, and it's like the Derive smart contract is number 8 for quite a while. And I think Deribit is like extremely slow to iterate. They're this big company now. There's all of these, frictions that get in the way of adding and innovating very quickly. And so I think the advantage that we have at Derive is we can't really compete on the like Hyperliquid front of just throwing out, 8-figure airdrops, unfortunately. But we do give the ability for people to monetize their assets, which is something that is a very hard thing in the space. So like I think what was it, this time last year or maybe earlier, we had all these vaults for all the LRTs. And like, that's a really useful product because a lot of people want to hold these LRTs and earn these points, and the points meta, God rest its soul, is now over. But, you want to hold these assets and earn the points, but you want to do something with them. And like, why not sell something like covered calls, right? You earn some good yield on top of that. I'm sure you expose yourself to a little bit of risk, but that is a pretty good trade if you, not financial advice, obviously, but that is a trade that one could do. In addition to getting the typical options yield, you get that points on top. So I think that's really the main advantage of trading on a DEX like Derive, is that you can do all these things that you can't do elsewhere. Maybe a quick plug, and like, I think this will air after the announcement goes live, but if not, it'll get edited out. We're launching hype options in the coming weeks, and hype has obviously taken the space by storm. I think if you're holding a bunch of hype, and if you were, unlike me, someone who got a big airdrop from hype, you might want to hold on to that asset, earn some yield, and be happy selling at like $50, $60 hype. So why not sell some options on that? Limit sell at $60. If it doesn't make it to that point, cool, you hold on to your hype and you earn a bunch of like yield in the 15 to 20% range. That seems like a pretty good deal, and we're the only exchange where you could do that. And so that's like a really compelling case, I believe, for what we have to offer at Derive.
I think also
That's really cool.
Just thinking through everything, all the amazing things that you've done with this business partner, it's really impressive. And I must admit, I probably had more of a negative or a kind of critical view of it before talking to you today. And I think it's really helped me to understand like how productive you're making the asset, where the part that it plays, the role that it plays. I think one thing that also comes to mind is like I would love it if there was more neutrality within what is typically being labeled as altcoins. But unfortunately, there is a tribalism, and Derive is actually its own chain. A lot of people don't know that, as well as an exchange. So we are kind of agnostic in terms of the assets we're trying to build a derivatives platform, trying to build an options platform. So a lot of the time, if anything, we go too far away from kind of the ETH L2 meta, and apart from Bitcoin, because I think everyone trades that as kind of a store of value. It's the TLDR of what I'm trying to say is like if our DEX was on Solana, I think Solana options would absolutely fly on it. And it's some of that is just that long tail tribalism, right? That I would encourage, anyone who's interested in Solana to look at you guys specifically, and also to look at, because we list what's in demand, right? So if Solana try to start coming and Sol is the big push and they want options on that, they got to like show with their feet. And then we can say, you guys are here, great, we can make a market for that. So I just wouldn't want any, Solana whales to look at this saying, yeah, but where's my market for this? Or like we're saying, the liquidity's thin. Step forward and we'll make this together. So I hope one day DFDV shares are trading on Derive, and we can make options markets for that too. Get some Solana bulls in here.
Let's make it happen. Let's do it.
Sounds good. I'm cautious of time, so I'll ask like one last question. Maybe to end on a positive note, hopefully. Where do you see the space going, Parker, in the next 12 months? Like, do you see us like hitting new highs, or are you maybe a little bit more pessimistic than that? I hope it's bullish.
That's a good question. I think unfortunately, crypto traders at this point need to become macro strategists. I think Bitcoin, and by extension crypto, is now firmly a global macro asset, and it is most closely tied to liquidity expansion. And so, I should be knocking on wood like crazy, but I kind of think that the 4-year cycle, crypto specific cycle, is dead, and it's going to be much more tied to the global liquidity cycle. And so maybe the global liquidity cycle is 4 years, and so then it's still a 4-year cycle. But I think the global liquidity cycle is a little more dependent on, human activity, and it's not this just kind of time-based thing, but it's what are the whims of the leaders in power at the time, and geopolitics and all these things. And so, man, short-term predictions are so tough. And I think, generally for us, it's, hey, is the world going to become more digital or less digital? And are sovereigns going to print more money, or are they going to print less money? And these are some things that I feel very confident banking on long term. And so then I just, we try to set ourselves up for some level of downside resilience, right? So that we don't get wicked out in a margin event or something like a couple weeks ago. And, in the meantime, we can kind of capture this long-term wave of digitization, non-sovereign money, and, so 12 months, I don't know. I know it's a cop-out answer. But generally speaking, every 12-month period is going to be higher is the base case. Just because every 12 months, there's going to be more money printed and more digitization happening. There can be short-term shocks, but like the general case is always it's going to be higher because that's the long-term trend. So that's the average short-term trend too.
No, I love that answer. I'm gonna remember that one.
I actually think it's reassuring just hearing us talk about us talk about 12 months, and then you say, short-term predictions are really hard. Short-term predictions in crypto are 1-minute charts. So even if we can just make that shift for people to start investing on a multi-year time horizon, then things like that make a lot more sense. Treasury mindsets make a lot more sense. CFA qualified leaders make a lot more sense, because then we're looking at kind of all of that, underlying good practice of genuine historical investment profession, rather than gambling, speculation, and 1-minute charts. So, yeah, I've been really impressed with hearing about it, and I would encourage everyone to go check it out. And maybe there's some Solana bulls watching who'll be new customers for you.
Thanks, appreciate it. Appreciate you having me on.
No, I really appreciate
the time as well.
Yeah, no, thanks again, Parker. Really appreciate the chat. Yeah, thanks for coming on. And do you want to plug any of your socials or anything like that?
Yes, you can go to our website, dfdv.com. It has all our metrics on there. So if you want to see what our NAV is and how much debt we have and what our SOL per share growth has been, all the things, it's right there. You can check us out at Twitter at DeFi Dev Corp. And we've got all that's on our website as well. So yeah, check it out and come talk to us, ask questions. I try to answer everything. Twitter, Reddit, via email. I try to be pretty available, or others on the team. And really appreciate y'all having me on.
Hopefully we can have you back in a year when the bull case plays out, and we can talk about how much further forward we are.
Let's go.
Great.
Awesome. Thanks Parker.